Hi guys, it's Paul Salazar at Hilton and Hyland Real Estate in Beverly Hills. I want to do a webinar with Jack Gladden at Priority Finance Real Estate Market. I've been in the business for about 14 years now, and I've been through the Great Recession. So, you know, I've been through these kinds of markets before. This is obviously a little bit different with the pandemic. So we're here to discuss, you know, how it's different, and you know what's going on with sellers and buyers as well. But you know, we'd love to introduce Jack Gladden from Priority Financial.
Yeah, thanks a lot, Paul. Yeah, so like Paul, I've been in the real estate business about 10 years. Half of that was a realtor. Now the other half has been in a lending capacity. We've worked a lot on a lot of different deals. LA has a very diverse group of borrowers and property types, which require all sorts of different loans. And there's a lot of discussion right now about what's happening in the mortgage market and can you get a loan, what kind of loans can you get, and there's a lot of misinformation out there, to be perfectly honest. So what I want to do and use this time for is to kind of set the record straight and educate people about what's actually happening on the ground, what kind of things are available, what things actually aren't available, and then so people have a better idea of what they can do and what their options actually look like versus just kind of relying off of someone who may not be accurate with what they're saying. For sure.
And Jack and I have been, kind of partnering together on some deals for the last 4 or 5 years. So he's somebody I trust and somebody who's helped a lot of my clients in either refinancing or in a purchase. So first, I want to share my screen and show you guys what's going on in the market. You know, like Jack said, there's a lot of things being said in the media, or just through people. Family and friends are saying things that if they're not in the industry, it might not be true. And the best way to look at things is through seeing what the facts are via the MLS. So if you guys can see my screen, Jack, can you see my screen?
Yeah, I
cool.
Can see it for sure. So I'm kind of learning what's gonna be happening in the market today.
Yeah, for sure. So
you know what it looks like on my end.
Yeah. So what I did is, I wanted to figure out, okay, what's going on in the market over $1 million. Jack and I work in the high-end luxury real estate market, so a lot of our clients are buying assets over $1 million. So what I did is I took a snapshot of what was sold in all of LA County over $1 million last year, starting March 16th through April 17th, which was yesterday. And the reason why I did March 16th is because that's when we started the quarantine this year. So I kind of wanted to take a snapshot at the exact same time. So if you can see here on my screen, let me the pointer right here, you see that there's 1,163 properties sold this year over $1 million in all of LA County. The next slide here will show you now this year, March 16th, when we started the quarantine, the shutdown, through yesterday, April 17th, we saw the sales go down about 14%. So now the sales are at 1,004. Say that that's not a huge drop, but it definitely is, because the beginning of this quarter was very strong, and it kind of halted. So a lot of these sales that are not here, that are not showing up here on the MLS are canceled sales, which we'll go over later on. So that's what's going on in the $1 million plus market for sales. I also wanted to talk about some other stats that are really important. This is through a website that I follow from Mike Delpreet. He basically analyzes different markets for real estate, and what he's showing here is how the Seattle market has done in terms of new listings since they got hit kind of first. I believe in February they got hit. Was that right, Jack? When Seattle got hit with the coronavirus?
You know what? I'm not exactly sure that exact timing. It sounds right.
Yeah, so they got hit first, if everyone can recall. So our data in Los Angeles isn't really there yet. I would think in about 3 to 4 weeks from now we'll have all this data for you guys. But for now, it's good to see how other markets are responding to the coronavirus and the ones that have been hit the hardest. So in Seattle, you can see this blue line right here are the new listings day by day in 2020. And then the gray line is going to be 2019. So you can see right here that it fell dramatically. So about a 54% drop in new listings. And that's for several reasons. People are either taking their house off the market because they live there and they don't want to be exposed to the coronavirus. A lot of people are just kind of uncertain. They don't know. How am I going to show my property, which we'll go over in a little bit as well. So that's the Seattle market right now. So we're seeing a huge drop in new listings.
And Paul, are you thinking, like, is the reason a lot of people aren't listing their property, is it because they don't know if the buyers are going to come in and they think it's not a great time to do it, or do you think it's because they don't want people in their house, basically, and they just don't think the buyers will be there? So
yeah,
what do you?
I think it's both. I think if you're somebody at risk, right, somebody older or somebody that is not healthy, and you're at risk, and you're selling your primary residence, absolutely. I mean, I would be scared as well. I wouldn't want people coming into my house. I don't know them. I don't know if they're carrying a virus. They could be asymptomatic. There could be a lot of things, right? So, and also they just don't understand how you sell houses during this time. There's other ways to sell houses right now without buyers actually walking in the house. I know that sounds kind of crazy, but we'll go over that in a little bit to kind of show the audience how we're doing it now, right? And with technology, we're actually able to sell houses without a buyer actually walking through. But yes, there's sellers out there that are going to be a little bit nervous about having strangers in their house, and for obvious reasons.
Yeah, thanks.
Yeah. So we're going to look now at the East Bay, and again, we're seeing the same thing. About a 70%. This is actually higher than Seattle. About a 70% drop in new listings. And what does this mean overall? Is that with less listings, there's going to be less sales, and less sales, it's going to hurt a lot of people, right? If you have, say, 1,000 agents out there, and you're dropping their income by 50%, that's going to really hurt the real estate community. Not only for realtors, but for sellers and buyers out there, who are looking to buy houses. And we're seeing this across the board. This is in Santa Clara. Obviously, this is Silicon Valley. We're seeing a 48% drop. This is in New York. I mean, as everybody knows, New York has been hit really hard with the coronavirus, and you can see here there's a 78% drop. That is huge, and we'll start seeing the effects of how that's going to affect the overall market in the next couple months. There's going to be a long effect. We don't know how long, but it's going to be well into the end of this year.
And so this was a little bit different then too, because in the last one, didn't we have, when everyone was trying to sell their property in the last recession, 2008, 2009, everyone was trying to sell their property at the exact same time, right? Because the bottom was falling out and people wanted to get out while they could. Where this, to me, it seems like, I mean, a lot of this decline in real estate volume is actually being led by the sellers who are just not listing their properties at all.
Yeah, that's a really good point, right? If they were still listing their properties and then we had less buyers, then we would probably see a lot of desperate sellers probably reducing their prices. I think there's also a lot of equity in the market, which we'll go over later on. But yeah, I mean, this is all about the sellers not putting their house on the market, and the reason why they're doing it is because again, they're probably a little bit nervous about having strangers in the house, and then B, they're just not informed, or their agent is not telling them, you know, that there are other options out there to actually list and sell properties now during these times. So yeah, so New York City, as you can see, is getting hit really, really hard. I mean, 78% drop in new listings compared to last year is huge. We're also looking here at the international real estate market, right? And again, we're seeing the same thing, guys. We're seeing that the amount of new inventory has just gone completely down. Here it says about 70% across the UK and Italy as well. 60% drop in the amount of new listings in Italy. These stats right here is what I took. These are snapshots, 24-hour market watch snapshots I took from the MLS. And you can see here, this is about 3 days after the quarantine started here in Los Angeles. And you know, I would say that the first week during the quarantine, people were still putting their houses on the market. At least like the first couple days of that week, and after that it kind of went down, and you can see that here. April 19th, I believe this is probably either a Wednesday or a Thursday of that week. I believe the 16th was a Monday when the mayor said, you know, all restaurants, everything's kind of closed for non-essential businesses. So you can see here new listings on this day, 142, and you can see that drop down to 121, 72, 103, 112, 92. And then here in April,
real quick, what area does this cover? Is this all of Los Angeles County, or what, the west side, or what do you cover?
This is all of Los Angeles, basically. Yeah, okay. Yeah. This is actually the homepage of our MLS, the multiple listing service. There's a little box right there on the homepage that gives you a 24-hour watch, so you can actually see, you know, what's happening on a day-to-day basis. So what I did is I took screenshots of this little box every single day, basically, for the last month, so I can see what's going on in the market. We're seeing also a lot of expireds and canceled. A lot of people that are putting their houses on hold as well. Those are different statuses on the MLS. But what we're seeing is, like we're seeing on the other markets, is that there's a lot less inventory being brought onto the market. We can see here there's around 60% drop in new listings in LA right now. So just, you know, kind of similar to what's going on in Seattle and New York and Northern California as well. So, you know, again, this is just the beginning, guys. We don't have a lot of stats in LA yet because it's only been about 3 to 4 weeks during the quarantine. But you know, with more stats, we'll be able to share some news on what's going on. But Jack, I think I've talked a little bit too much. Tell us about what's going on in the mortgage market. What are you seeing?
Yeah. I mean, those are wild statistics. I've never personally seen anything like that before. But yeah, that's really something to think about. But it is interesting, going back to my point earlier, that if you're removing a lot of the supply from the market, and although, you know, there's definitely some demand, at least temporarily removed from the market because of people being furloughed and things like that, to some degree, you might be seeing a little bit of an equilibrium playing out, and that's why we're not seeing that dramatic reduction in prices, because the supply is less, but then the demand is less, and it kind of balances each other out. It'll be, what I think will be really interesting to see is whether that dynamic continues, or if we see a big swing one way or the other. And I mean, anyone who says they know what's going to happen is wrong, and I wouldn't listen to them. No one has any idea what the next thing is. And I think really everything's going to depend on what the timeline is of how quickly things open back up, but then also what does that look like when things open back up? Because, all right, for instance, I have a wife, she's pregnant right now, okay? So she's a high risk group. When you're pregnant, you don't want to have a kid, you don't want to get a fever. It's a really bad thing. So even if tomorrow they lift all of the travel restrictions and everything, I'm not going to go out to restaurants, I'm not going to go to a sporting event or do any of those things. So it'll be interesting to see what happens, how much we get back to normal, and like how quickly we return to that. And if we get an antiviral drug or something like that that helps, then I think we could see a really quick rebound. And if we don't, then who knows what'll happen. But anyway, so let me share my screen. I'm going to tell you a little bit about some of the new dynamics that are happening in the mortgage business, because again, like I said, there's a lot of misinformation out there about what kind of financing is available. And so I want to show that. So let me share my screen here real quick.
By the way, congrats on having your wife, well, both of you guys being pregnant, which is great. That's awesome.
Yeah.
When does she due?
End of August. So it's a fascinating time to be.
Man.
They always say there's never a good time to have a baby. You just got to do it if you want one. But this, like, it's an especially challenging.
I'm sure. Yeah.
Hopefully we got all this worked out. It's weird, but we're happy about it. We wouldn't change anything. So,
yeah, for sure.
Can you see my screen?
I don't see your screen now.
Really? So you don't see the where things have changed?
No. Is the little button highlighted green when you click on it, the share screen?
Let me pull off real quick. Oh, there it is. All right, forgive me. We're all learning how to work remotely now.
Oh, yeah, for sure.
Okay, so is any of that cut off, or can you see the whole thing?
Yeah, there's there you go. On the right side, it's a little cut off.
So, how about now?
Yep, perfect.
Okay, great. So where we're seeing a lot of the big changes right now is there's a lot of scrutiny going on about whether or not people are employed. So typically we would do what's called like a verification of employment like 10 days before. Now we have to verify your employment the day of funding. So a lot of people are being furloughed or laid off, and so it's really important. Like if you're going to get a mortgage, you can't be furloughed. So some of the reduce in demand that you're seeing is because people are temporarily don't have an income or have a reduced income, and so that's reducing some borrowers' ability to purchase. Again, when people go back to work, that's going to all change and everything will go back to normal. So that's for salaried employees. If you're a self-employed borrower, since we can't just take your word for the fact that you're working, because everyone go, yeah, everything's good. So what we need to do is we need to see your most recent bank statement to show that you're still in business and your business is still active. We don't necessarily expect you to have 100% of your historical earnings, but you need to be showing enough to be able to qualify, basically. So we just need to know that, like if you worked in the cruise ship industry as a 1099 employee, and you're self-employed, you're probably not going to be able to get a loan right now until things return back to normal. But the people that are salaried, nothing really has changed for those people. If you're a salaried employee, you still have your money coming in, you can get a loan. So you can refinance, you can purchase. Not much has changed from that standpoint. The only big differences now are things are becoming a little more difficult if you have a low down payment. So, if you've got only 3.5% down, that's going to be a little more challenging. If you've got a credit score below 680, it's going to be challenging for you. But aside from that, if you're salaried, you've still got the money coming in. We're doing loans. I'm working on a lot of purchases right now, and we're funding them, and we're not having any issues over there.
Okay, yeah, I mean that makes sense. I mean, in Los Angeles, there's a lot of people that are both salary and a lot of business owners, like you and I, where we are on commission only. So it's that's definitely going to hurt a lot of the small business owners here in Los Angeles if their business is hurting during this time.
For sure.
Yeah.
So, do you want me to send? Do you want me to send it back to you?
Yeah. Let me share my screen here. I want to go over what other people in the industry are kind of saying. Obviously we have Jack here, and you have myself, but there's there's other companies, other sectors of the real estate industry that are also being affected, and one of them is escrow. Jack, can you see my screen?
Yeah, I can see it.
All right, great. So you know, I called Beverly Hills Escrow. I spoke with their owner, Lola Lavoie, who, you know, I've done a lot of business with her over the last 10 years here at Hilton and Hyland. She's been in the industry for, I think, 40 years. She's owned Beverly Hills Escrow since the mid 80s. And you know, when I talked to her earlier this week, she said that she's lost about 75% of her business. So you know, we were talking about 60% of new listings are not coming on the market as they were last year. She has 75% less real estate transactions happening right now, and that's a great indication of what's going on. You know, I also spoke with Mark Medina at California Title. You know, escrow and title are two different parts of the real estate transaction process besides lending, which is what Jack does. Mark, you know, I spoke with him earlier this week. He's lost about 30 to 50% of his new business. Lola 75, and he's up to 50%, which is hard, which is tough. He's also saying that the purchases from the west side to the San Fernando Valley are about 30%. This is just his stats. You know, when I went on the MLS, those are overall LA County stats. But what he's seeing in his company is about a 30% drop in new purchases in the west side and San Fernando Valley. He is saying, though, that the market under $1 million is still doing well, which I'm not surprised, because I feel a lot of those borrowers, there's a lot of those borrowers actually, and that market was already super hot. You know, I mean, you know, when a house under $1 million came on the market, you'd get, you know, 10, 15 offers. So, you know, even though they might not get 10, 15 offers, they're still getting 3 to 5 offers and still driving the price up, or, you know, selling for asking price. The other thing that Lola told me from Beverly Hills Escrow is that in March, 15% of the transactions that she opened in February were canceled in March. And so, Jack, I kind of want you to kind of talk about that a little bit and see, you know, what, you know, obviously a lot of her transactions are going to be buyers that have loans, and, you know, some are going to be all cash. But the buyers that have loans, we're seeing a lot of escrow cancellations. I know that you spoke about that earlier a little bit, but can you kind of, you know, go a little more into detail about that?
Yeah, sure. So let me pull up my next screen here. So 15% actually is, I mean, that's in a regular time, that would be a substantial amount, but you know, given everything that's happening right now, that's not that bad. And so one of the big areas in the mortgage market that completely disappeared overnight, which areas like Los Angeles, probably the Bay Area, and in large cities that have a lot of self-employed borrowers, they're really negatively impacted by this development, because as a lot of small business owners can relate to, like, one of the biggest things you try to do when you file your taxes is to minimize your tax liability, right? And because of that, you can't qualify for traditional financing, because what you actually make and what you show you make on your tax returns are two different things, right? And so we had things called like bank statement programs, debt service coverage ratio, and creative financing like cross collateralization, which would allow borrowers who make a ton of money, and we can prove they make a ton of money, get into loans and purchase a property. That market completely, like, literally overnight disappeared. And so now no one, like, I mean, I had probably 30 different investors that we worked with that did these kind of loans. Now we're down to 2, and, you know, you need a 40% down payment in order to do it. So that's gone away. So when I see the stat that 15% of escrows canceled, I would imagine in a large part is because of that these programs don't exist anymore. Now
what's a non-QM?
Yeah, so it stands for non-qualified mortgage, and so that just means it doesn't live up to the what's considered a qualified mortgage in the Dodd-Frank Act. And so Dodd-Frank has this like very strict ability to repay rule, and they want to like show your tax returns and prove it that way. And this is like a bank statement loan. We're having you prove your income and your expenses a different way, but technically it doesn't qualify to Dodd-Frank's Appendix Q and what they want. So it's a little technical, but just understand these are the loans where you're not showing your tax return, but you're proving that you're making a ton of money a different way. And now those are gone. And but that said, we do expect those to return once things return normal in the economy and people know what's going on, basically. So
those loans, Jack, kind of explain to the audience, you said investors, right? Who are those investors? Are those big banks? Are they small banks? Are they just you're like a like a 1 or 2 person bank? What is it when you say investors?
Yeah, sure. So typically the investors are banks that you've never heard of before, and so it's a lot of Wall Street people and essentially funds that decide that they want to lend money, and then they're willing to kind of fill this void in the market where there's a group of people that aren't being serviced by the traditional big retail banks, your Chase, your Bank of America, and those kinds of banks, because they make a ton of money. They can prove they make a ton of money, but it just doesn't reflect on their tax returns. And so investors came into the market to say, okay, we'll lend to these people. And then they created a market on Wall Street, and then they securitized it and turned it into bonds. But what happened is everyone decided they don't want to buy those bonds anymore because they view these as risky loans. Even honestly, if you ask me, a lot of them aren't that risky. They require 20 or 30% down payment, so they're actually not risky. But perception becomes reality, and so now no one's buying those bonds, so now you can't sell them, and so all those investors stopped accepting new loans for those sorts of things. So it gets very technical, but just understand that once people have confidence that things are going to return, and like small businesses can perform, and like a restaurant can take new customers and things like that, then there will be a market for this kind of thing again. So it will come back, but it's we're in purgatory with these things for the time being.
Yeah. How many transactions have you had that were non-QM that like buyers that you had to say, we have no more loan for you?
Yeah, this was a very strange time. So I had about 20% of my business is non-QM stuff. And, we had loan approvals. We had like a commitment to lend essentially from our investor. And then I got a phone call saying, hey, we're not going to be able to do this loan anymore. And you have to tell your borrower like they don't do it. And luckily, these were refinances. So it's bad and it hurts, but it's not as bad as if it were a purchase, where a lot of colleagues, and so this isn't our bank, this is industry wide. A lot of my colleagues, there were people who had lifted their loan contingencies and now their deposit is in jeopardy and all sorts of madness, because it's kind of hot potato. No one wants to be stuck with these loans if there's no investors buying the bonds at the end of the day.
Yeah.
But
that makes sense.
They'll come back. It's just a matter of when.
Yeah, no, for sure. And speaking of, buyers that, might have had, full loan approval with a non-QM loan and that was not available last second and they're losing their 3% deposit. Right now, CAR, the Association of Realtors here in California, has created about 3 or 4 new forms. They're coronavirus forms. And the forms basically say, if your loan is affected because of the coronavirus, that you can back out or you can extend the escrow, X amount of days. So, we're using those forms to protect our buyers that are buying, houses with loans, which is great. But those buyers, like you said, that were probably in escrow in February or early March before this whole thing started, they could have lost 3% deposit, and that's unfortunate.
Yeah, and it's very unfortunate, and it's just one of those things where it's like, who could have predicted this when you're lifting your loan contingency? That the entire, where the world is today and where it was a month ago is, I mean, it's dramatically different. You know?
Yeah,
So,
for sure.
interesting.
So I want to go over some of the pros and cons for sellers right now. Is there an advantage of putting your house on the market now? Is it not? So let me share my screen here. Jack, let me know if you can see my screen.
Yeah, I can see it.
Cool. So is there opportunity for sellers? Yes, there is. It's still a seller's market in some areas. Right now we're seeing obviously a lot less inventory, but also a lot less buyers. So it's almost like the supply and demand is almost equal, which is kind of good for both sellers and buyers. Well, not good for buyers because obviously buyers want a buyer's market, but in terms of sellers, the opportunity is there's a lot less property on the market, so you have a lot less competition, right? In a regular market, in a regular price range, you might be competing with 10 or 20 houses. Right now, you may be competing with 2 or 3 houses, or maybe 5 houses. So that's a great advantage of being a seller right now. I want to talk about one of my listings in Beverly Hills that I listed off market. And I listed this off market about a week after quarantine. So not the best time to put it on the market, but it's a vacant property and the sellers wanted to sell. We ended up getting 22 offers. We got 18 offers in about 3 days. So that just shows you right there how how good the market still is, right? I mean, we just came from the biggest bull market we've ever had in the history of the United States, right? I mean, at least here in Los Angeles, we saw a huge growth every single year from 2011 through a month ago. This house that I listed in Beverly Hills, it's in a great area where there's a lot of demand, but nonetheless, I thought I'd be getting 5 or 6 offers. We got 18 offers in 3 days.
Well, I think that speaks to the fact that, and I mean, this is always true, but it's going to be especially true across the nation now, is if you're in a prime area, the values they should hold up, because everyone knows this isn't going to last forever. And so some people are willing to buy into that area knowing that things are going to get better, and then they're going to continue to see appreciation. So they see opportunity in the fact that now they can actually get in and they don't have to necessarily compete with 30 different offers. I mean, in this example, it looks like they still did have to compete with that. But again, like if you've got a good property in a good area, I imagine that it's not business as usual, but there's going to be buyers and there's going to be people who need to sell, and then there's going to be people who
100%. And again, this is a good example of how even during this time, people are still looking to buy. I mean, 22 offers as of yesterday is a lot. Let's talk about how you can sell property during this time. Again, a lot of sellers, aren't informed by their agent, or maybe their agent doesn't know, what the steps are in order to sell a property right now. Obviously, if you're a seller that it has a high risk of the coronavirus and it affecting their health, they might not want to put their house in the market, and that's totally understandable. But if you do have to sell, or you feel confident that having people in your house is not gonna get you sick, or you're not high risk, then putting your house in the market right now, I think, is a good idea. I mean, it's not, like I said before, there's a lot less competition, right? So you have a bulk of buyers, and you have maybe 10 buyers looking in a specific price range in a specific area for now 5 houses instead of 15 or 20 houses. What we're doing now is we're doing virtual showings, and the way we're doing it is either 2 different ways. On my listing on Bedford, that's a vacant property. So if you have a vacant property, those are ideal right now to put on the market because there's nobody living in there. So there's no health risk for you as the seller, right? If you do live in the in your primary residence and you are going to sell it, you can do a virtual showing, and that can be 2 different ways. You can have your listing agent go to the property and do a FaceTime, a Zoom, or go to a meeting with the buyer and the buyer's agent and walk through the property and walk the property the way they want to walk it, right? So, the buyer can be on the, on their phone or on their laptop saying, hey, can you open up that closet? Can you open up those drawers? Can you show me the view from that window, right? So that's one way. If the sellers don't want even their listing agent at the property, what we're doing now is we're having the sellers actually show the property. I know this sounds kind of strange, and a lot of sellers, probably aren't excited about this, but if you do have to sell and you don't want people in your house, this is the way to do it, right? So we would set up a Zoom or a GoToMeeting or a FaceTime with the buyer and the buyer's agent and the seller and the listing agent, right? And the seller would be at home, and they would just, again, they would walk around the property and show the property the way the buyer wants to see it, right? So if the buyer says, oh, can you go down the hall? Can you make a left here? Can you go in this restroom? Can we see the shower some more? Can we, look at the master closet, all that stuff? So that's one way of showing properties right now. Eventually, the buyer is going to want to access the property either before they submit an offer or during the escrow process, right? Because I don't see how a buyer is going to buy something without seeing it. That's a possibility, but I think the odds are very are very little.
Yeah, that's what I was going to ask. I was going to say, because I know that buying a property sight unseen, I mean, even with the virtual things that are possible, still you want to go in and, especially at these higher price points, you want to go and experience the architecture, feel the property, see the light, experience those sorts of things. And I completely understand and agree with not having every just potentially interested person going through. But let's say somebody who is actually going to put in an offer and gets the offer accepted, I imagine they're going to need to come in and see it.
For sure.
Completely sight unseen properties end up just never closing. So I'm curious how to push back of people saying, no, you can't come in and see it until you own it, or are most people realistic? Okay, at some point they're going to have to come in here.
They're realistic. They're realistic. In a normal market, they might get, if it's a good listing, they might get 3 to 4 to 5 showings per week. So that means the buyer and maybe the buyer's wife or husband or the kids are coming, right? So you might have a group of 4 people per showing. So maybe 30, 40 people, not including open houses. Open houses, you might get in between 10 people to up to 30 or 50 people depending on the listing, right? So if you do the virtual showing first, then you kind of limit a lot of the people that are going to be in and out of your house. And then if they really do want to see the property, then we ask them to put gloves. We ask them to put a face mask on. So then obviously, it's gonna help out. Is there still a risk? There obviously always is gonna be a risk, but it's not gonna be as big if we take the precautions that the state and the government are asking us to do right now. I also wanted to say for sellers, there's a lot more traffic on Zillow, Realtor.com, and Trulia. Those are the big 3 sites that buyers are using nowadays to search for properties. Why is there an increase in traffic? Because people are working from home, right? So they're on Zillow and they're on Realtor.com and Trulia, just kind of browsing around. Are they real buyers? Who knows? But you're getting a lot more traffic onto those sites. So more eyeballs on your property. The other good thing is that our MLS, not all of them, but our MLS here in Los Angeles is now allowing new properties to come on the market, but displaying 0 days on market. So the days on market counter is not going to go up. Why is that good? If you have a house on the market for 3 to 6 months, it becomes a stale listing. And that's not good for for sellers, right? The perception of a stale listing for a buyer means a discount. But now with our MLS, we've been proactive, and now they're allowing these houses to come on the market, but not increasing the time of days on market, which is great for sellers.
Does that carry over to Zillow and Trulia and all those as well? So
that's a good question. That's a good question. I don't think so. So I think the MLS is trying their best, Maybe Zillow and those other sites are going to catch up soon. I don't know, but at least for the MLS it is, which is good.
Right.
Yeah, I wanted to talk about the cons of listing during this time. Obviously, there's a risk of getting infected, right? And that's a scary risk if you're a high risk person. The other thing is that buyers are going to expect a discount right now. Unfortunately, that's just the reality of the market, right? Buyers know what's going on in the market, and they're also seeing in the future, right? Like if this lasts, an extra couple months, how is that going to affect real estate prices? It's probably going to affect real estate prices. So buyers are looking at a 3 or 5 or 10 or 20% discount. I don't know what those figures are right now, but in the next couple of months, we'll start seeing that, happen. I've been talking to a few agents as well about this, and they're saying that some of their buyers are asking for discounts during escrow because of the coronavirus. So, that's obviously one of the things that you have to think about when putting your house on the market. Wanted to talk about the pros and cons of for buyers right now. If you're a buyer right now, I think it's a great time to buy. I really do. Prices may drop as sellers get desperate. That's obvious, right? If you have to sell and you have to, you're either, looking to retire and move out of the country, out of the state, or if you can no longer afford your house because you got furloughed, you got laid off, then you got some desperate sellers. So if you're a buyer right now, I think it's a great time. And I'm sure Jack, you can chime in about how good rates are right now.
Yeah, sure. Yeah, so interest rates are very low right now. I mean, they're historically speaking, they're the lowest that they've ever been. So right now, that really helps, because at the end of the day, the price of a property isn't as relevant to a buyer as the monthly payment on your mortgage, unless you're an all cash borrower. So the fact that there's such low interest rates makes a lot of different purchase prices attainable or more affordable for the people. And also, I'll show a slide of that. Do you want to hand it over to me real quick?
Yeah, sure. I just wanted to go over just one last thing before
Do
that.
I just have it at the very end.
Yeah, no, for sure. So, I mean, I just wanted to say, obviously, you can see properties through virtual tours. The due diligence period in terms of inspections and all the documents you have to sign, still business as usual for that. I mean, inspectors are still going to properties and inspecting them. And the good thing is that with all the technology we have nowadays, DocuSign, everything can be signed electronically on your phone or on your computer, which is great. Regarding the cons of buying right now is is the fear of an uncertain market, right? If I buy now and I want to sell in a year from now or in 2 years from now, am I going to be upside down? That's a legitimate question, and I don't have the answer to that. And I don't think anybody else does, right? Because there's a possibility that that the market goes down 5 or 10%. If you buy right now and you want to sell next year, you're going to lose money. So you really have to look at the overall picture and be certain that you don't want to sell in the next 1 or 2 years, because I always tell my clients, I always tell all my buyers, real estate is not a short-term investment. It's a long-term investment. It's a long-term game. So especially right now, I would be very cautious about buying now and thinking about selling in a year or 2 from now, because we just don't know what's going to happen.
Yeah, and the timeline, that's the most important thing. And what is your timeline, right? And real estate, it's a long-term investment. And if you're buying in a good area and it's a quality property, if you have a long enough timeline, it's not even going to matter that much when you buy it. But like you said, I mean, if you're trying to buy it and flip it and your time horizon's a year or something like that, it would be an extremely risky bet to be making right now. I'll also say though, almost nobody times the market right. I mean, it's very, very rare. So if you're just trying to think that you're going to wait until everything bottoms out. Like, when's the bottom? Is that 3 months
Right.
from now? Is that a year and a half from now? No one knows. Everyone's going to know in hindsight, but no one really knows where the bottom of something is. And so if this thing recovers and everything returns back in 3 months, everyone's going to be kicking themselves that they didn't buy a house that they were planning on living in for a long time right now. But if it like goes on for a year, then everyone's going to, you know, be really grateful that they didn't, because the values will go down. So no one knows. But if you have a long time horizon, honestly, then you need a place to live. And so it's not a bad idea to do it. But yeah, I wouldn't be buying right now if it's a 1 or 2 year time horizon before you need to.
Yeah.
For sure. And so if you want, why don't I just say a few things, because it's particular to our market, about the jumbo market.
Please. Yeah, please do.
So here, let me share my screen. Okay, so I'll run through this real quick. There's a lot of misconception right now that you can't do jumbo loans. That's completely inaccurate. So some of the mortgage banks stopped being able to do them because of investors that they use don't have them anymore. But I mean, for our mortgage bank particularly, we've got a lot of investors still doing jumbo loans. Now, the things that have changed is, you know, they're requiring a higher credit score. So we're seeing a lot of programs requiring, you know, 720, 740 credit scores. It's different depending on which ones, but if you want to have decent rates and everything, you're going to need that. The other thing is a lot of them have changed where they're going to want to see 20% down, where before you could do, it's called like an 80-10-10, so 80% first, and then 10% second, and that kind of thing. We're seeing them like cut back on that, or make the fact that you have subordinate financing, a second mortgage, make the rates really unattractive to the point where you wouldn't want to do it. But that said, if you're a normal borrower who's still working, you've got a decent down payment and you've got decent credit, you know, 720, 740 and above, we're still doing jumbo loans all day long. So don't let anyone tell you that jumbo loans don't exist anymore. It's simply not true. And I've heard that. I've got a lot of realtors that I work with calling me and they're like, so do you do jumbo loans? How am I going to sell this listing? And we do. We absolutely do them. So I just want that to be known. And just so people know on this call, in Los Angeles, a jumbo loan is any loan above $765,601. That's a jumbo loan. Nationally, that number is 510-401. Okay, so that's what's considered a jumbo loan. So
yeah, and our market is full of those loans. So
unless you're doing a condo, it's almost exclusively those.
Yeah. And you're right. There's a lot of people that think that these loans are no longer available right now, and that's not true.
And they're definitely available. So don't let that discourage you, because there's a lot of misinformation in the media right now about all those things.
What's like a good rate on a jumbo loan, you know, for like a prime borrower?
Yeah, so you could just take a dart and throw it, and that's what the rates are on a day-to-day basis. But generally speaking, you know, jumbo prime borrower, anywhere from 3.5%. Sometimes you might be able to get down to 3.25%, or it might be a little higher. It just depends on your down payment, your credit score. Jumbos are very conservative right now, but if you've got great credit, at least 20% down, you're going to get an unbelievably low rate, where even if it were a year ago and you got this rate, I mean, it would have been outrageous. So
yeah, that's you know, you have to think about that when you're buying, or you're thinking about waiting 6 months or a year from now. You know, that rate right now is unbelievable, right? If that rate goes up 0.5 point or even a full point, which it could in 6 months or a year from now, your payments are going to be a lot more expensive on a jumbo loan. You know, so you have to think about, okay, prices may drop a little bit, but the rates might go up, so they might, you know, kind of even out at that point.
Exactly. And so, I mean, you're talking about hundreds and hundreds of dollars a month, especially in a jumbo loan. You could be talking about over $1,000 a month in savings. So this is something people need to really take seriously, because it can have a big impact. And remember, guys, like, this isn't going to last forever. Like, there is a light at the end of the tunnel one day. We just don't know when it is. But like, things will return to normal. And the biggest reason why the rates are so low right now is because of the coronavirus. So once things go back to normal, meaning there's no coronavirus, like, the rates in theory should go back up. So this is an opportunity to really get a low rate, especially if you own a property and you're not selling it and refinancing into a low rate. I mean, there's never been a better time to do that. And everyone who has a mortgage basically could probably save money by refinancing. We'll get into that at the very end.
Yeah, for sure. Do you want to talk about forbearance? I know that a lot of people think, right now is a great time to call your bank or to call your mortgage bank and say, hey, I can't make payments, or can I stop making payments for a couple months? What's your thoughts on that?
Yeah, so this is the biggest, most dangerous piece of information there is in the market right now. Okay, so let me give you an example. I'll scroll down so you can see the example in a second. But okay, so for forbearance should only be used as an absolute last resort. And I'm not talking about because ethically it's the right thing to do, although that's true. That is not the reason I'm saying this. I'm saying for your personal finances, this is the absolute last thing you should do before basically throwing your hands up and saying, okay, I can't make mortgage payments anymore. And the reason why is forbearance is not just the mortgage servicer saying, okay, you don't have to make payments for 180 days anymore, and we're just going to tack the payments onto the back end of your mortgage. That's what the financial press has given people the impression of, and it is absolutely not the case in most examples. So what really happens with forbearance is they say, okay, you don't have to make payments. In this example, we're going to say for 3 months. Okay, so here's the example. Let's say, so you don't have to make payments for 3 months. And so we're going to start, let's say, I can't see the screen. Is it May in the example? Paul, can you read that to me?
It says August.
Okay, so August on the bottom. But all right, so if we start in May, so you're going to skip your May payment, you're going to skip your June payment, and you're going to skip your July payment. Okay, so you're feeling good. You haven't had to make your $2,500 mortgage payment for 3 months. Okay, now in August, all 3 payments that you skipped are due, all of them, plus your regular payments. So now you've gone from $2,500 in your normal payment to, in August, you owe $10,000 all at once. And so, I mean, if you can't make them right now, I don't know what's going to change so much where you can do it in August. And so it's going to give people and their house a false sense of security, and that bill's going to come due, and they're not going to be able to pay it. And then now you're looking at a foreclosure. And so this could potentially create a foreclosure crisis because people aren't going to be able to pay that $10,000 balloon payment. It's a one-time payment, but still, like if you can't pay it today, why would you be able to pay 4 times as much? Right? And so barring any new regulation coming from the government, and that may happen because the government created this crisis. So they might write a law saying, hey, you can do a loan modification and actually tack this onto the back end of your mortgage. But they might not. And so you're really rolling the dice that the government's going to fix this for you. And if they don't, and you don't have that 10 grand in this example, like now you're going to lose your house, right? So like I'm saying, unless you just have no income coming in, like you should absolutely not be doing this because it's really going to bite you when the bill comes due.
Yeah, no, for sure. I own an 8-unit apartment complex in Long Beach, and 4 of my 8 tenants are not making their rent because of the coronavirus, and I can't evict or I can't do anything right now. So it's going to be tough times for a lot of people, investors who own just one property like myself, or a lot of properties, or just your average homeowner who got laid off and they can't make their payments for 3 months, and then they're expected to pay $10,000 in 3 months from now, which is that's almost impossible. I kind of wanted to talk about how this market compares to previous markets, just a kind of a small glimpse. Let me share my screen with you. Let me know when you can see that.
No, I can see it. It's cool. A little blurry. I think we're just gonna have to make do.
Okay. So how will this market compare to previous recessions? Okay, and these are from a great site. All these graphs are for free, and you can go in and check out all the articles here from Keeping Current Matters. On the left, this talks about the last the Great Recession back in 2008, and it talks about how fast properties were going up in value, appreciation every single year from basically 2000 all the way through 2005. And you can see like these are huge numbers. In the last 6 years right now, they've gone up a lot, but not even close to what we were seeing before the Great Recession. Here on the right, this talks about, how many people can qualify for a loan. And Jack, I'm not sure if you were in the industry back in 05, 06, but you can see here, everybody was getting qualified to, for a loan. Even if you didn't have any money to put down, you can buy a house with no down payment. These small little teaser rate loans, and then in 3 or 4 years, when your rate went from 1% to 5% or whatever that was, you were screwed, right? I mean, you couldn't make the payments. Right now, over the last, you can see here from 2008 through today, you can see that this has stayed pretty constant, which is good. So that's saying basically that banks and lenders are only lending to people that are qualified, right? Not just anybody in the subprime market back in 05, 06, when anybody can get a loan. Do you have any comments on that?
I know what it was like before. I wasn't working in it, but we have incredible amounts of underwriting standards that we have to put people through in order to qualify. So it's actually that line is really important that you show, because it's a slow and gradual increase, and that's what you're supposed to see and what you want to see in a normal, healthy market. When you see these giant spikes, that just means volatility or something is out of whack. And so that's an encouraging sign, and these are really great charts to show that supply isn't artificially created by debt from people that shouldn't have the debts or can't afford the debt. So it's a really good slide. And people, I can say, people are in a much better position today because the down payment requires were so strict and the income guidelines were so strict, so people can weather a financial storm like the one that we're in right now, where you don't have everyone running for the exits at the same time because they literally can't make their payment and they've got nothing invested and nothing to lose in it. That's not the situation we're in today. The housing for a lot of borrowers, especially jumbo ones, they would have to lose 20 to 30% of the equity in their property before it made sense to foreclose, right? Where before in the last market, it was like a 5%, like all it had to go down is like 5% for people to do it. So it's a completely separate circumstance, but that will also make it so there's not a flood of supply on there, which then suppresses prices and creates a spiraling situation.
For sure. And these next slides are also going to show you kind of the same thing. We've been in a seller's market here for quite some time. You can see obviously a buyer's market back in 06 through 10. And then, like you said earlier, Jack, there's a lot of equity right now in housing, right? You can see here in 2005 through 2007, people were taking out $824 billion in equity, and they were buying boats and RVs and second homes or traveling or whatever they were doing, right? And now, over the last 3 years, only $232 billion. So that just shows you that, first off, banks are probably not going to give you 100% equity, right? A loan based on the full equity of your house, but also people are just being more conservative about refinancing and taking all that equity out of their house. Let's see here. This also another great slide. 30% of all homes are owned free and clear. That's amazing. So again, guys, what we're trying to get to is that, even though we're probably going to be, going into a recession, even though it's not, a fact yet, but it's most likely going to happen. It's obviously not caused, it's not going to be a dramatic shift in the real estate market in terms of prices as it was in the Great Recession, because that was a recession created by the real estate market, and this one obviously isn't. And people have plenty of equity in their houses, so they're not going to just start giving away houses. They're not going to foreclose. They still have plenty of equity to actually sell.
Well, that and technically, the United States and especially Los Angeles is underbuilt. So there's actually not enough houses for the people who want them and can afford them. Where that was the opposite before, where before we were actually overbuilt. So there's that dynamic as well. So that should also keep the supply and demand equation intact.
Yeah, for sure. I mean, I live in the West Side, and there's a ton of apartment complexes being built right now, a ton, because there's not enough housing, like you said, for people. So there's still a lot of demand here, at least in Los Angeles. I don't know how other markets are going to be affected by this. There's going to be an effect. We just don't know how big or how bad. But based on what we just talked about, hopefully it's not going to be as bad as previous recessions.
Yeah, for sure. And so let me tell you one quick thing just about refinancing too. So let me share my screen here real quick. Okay, refinancing. So there really has never been a better time to refinance right now. So especially if you plan on staying put in your property, almost anyone who bought a property really at any time can save hundreds of dollars a month, in a lot of cases, thousands of dollars a month by refinancing. The other thing I want to tell people, look at these charts. So that's over the last, since 1971. Look at these 16% interest rates, and then where the rates are today. So they've been going down, 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 and what people can afford really is based off of interest rates. And so this is just in the last year, right? So we were at 4.25 at the start, and now we're at around 3.33 on average. That's with perfect everything and a lot of equity. But basically, even if you bought in the last year, 2 years, 3 years, it doesn't matter. You could probably refinance. I mean, almost all of my business personally right now is refinance transactions, and I'm saving people on average $500 to $700 per month, which is a lot right now in this market. The other thing I'd like to just have people think about is if you do have a lot of equity in your property, and since we are in somewhat uncertain times, it's not a bad idea to cash some of that money out and then to either pay off your credit card debt, so that way you can minimize your required monthly payments, right? So that could be thousands of dollars for a lot of people, or to just build an emergency fund with cash in case you are one of the unlucky ones who gets laid off or something, because it is uncertain. So people can really use this as an opportunity to shore up their finances, and they should really consider doing that, and they should do it now. And so what I've seen with all the appraisals coming back is the appraisals still reflect the all-time highs in real estate values. And so the amount you can cash out is based off of what the property appraises at. And so if you do start seeing these property values drop, one, you're going to see a lot of banks stop doing cash out refinances, number one. And number two, you're not going to be able to get as much cash out. So now is really, if you're thinking about doing a cash out, now's the time to act, because we don't know what the future is. So that's everything regarding the mortgage, So we're living in kind of an interesting period of time. So
yeah, to say the least. And you're having a baby during this time, so
yeah, why
good
not?
luck with everything, man. Thanks for being on. Thanks for being on. I really appreciate it for talking about the mortgage industry, which is obviously a huge part of real estate. And maybe we'll do this in a month from now with different stats and hopefully better stats to see how everything pans out.
Yeah, let's keep these going, because things change on a week by week basis, and it could be better or worse. So it's going to be really important for people to just stay up to date with everything, and get your information directly from a mortgage professional on the mortgage stuff, because there's a lot of misinformation on there. So just call someone. Our contact information is on the bottom. So if you want to ask me, or you can ask Paul, and then I'll answer the question through him. But don't just assume someone knows what they're talking about unless they actually work in the industry.
Yeah, and they work full time, And they work. That's important. It's important. Yeah. All right. Any last comments, Jack?
No, I think just everybody out there, stay safe. Just remember, this is going to end. This isn't the end of the world. we're going to get through this. We always do. People thought, the last recession was the end of the world, and the people who realized it wasn't are in some of the strongest position as a result of it. And so just know, like, expand your time horizon and try to see past the next month, the next 2 months, next 3 months, and just look at the big picture, people. Like, things are going to be okay. So just take a deep breath, relax. Don't watch the news. Don't look at the numbers every day. Like, we're going to be fine. We really are.
Yeah, I agree. That's a good message. I'll actually end on that because that was really strong. And if you guys have any questions, feel free to reach out to us. You have our contact on the bottom. And thanks again, Jack. Have a good weekend.
Yeah, you too. Take care.
All right, buddy. See ya.